What's happening, crypto fans, and welcome back to Bitcoin Bulletin. The market is moving at warp speed, and if you're not plugged in, you're missing out on some seriously game-changing developments. Today, we've got a packed show that's going to keep you on the edge of your seat. We're diving deep into a controversial expansion that could reshape local power dynamics, exploring expert predictions that put Bitcoin on an unprecedented price trajectory, uncovering significant global financial signals that might just be the catalyst we've all been waiting for, and we're tracking a major market reversal that has everyone talking. You do not want to miss this. Let's get into it. First up, we're heading to Hood County, Texas, where a state judge is considering a critical decision that could have major implications for a local Bitcoin mining operation. We're talking about a proposed third power plant that's sparking heated debate among residents and environmental regulators. What does this expansion mean for the local grid, the environment, and the people living nearby? We've got the details on this escalating situation. Then, we're shifting gears to the global financial stage and zeroing in on China. Record-breaking margin debt in their stock market is sending ripples across the world, and we're breaking down what this means for risk appetite everywhere, including the crypto space. Could this be the signal for a major shift in global investment strategy, and how might it impact Bitcoin's journey? Stick around to find out. But that's not all. We're also bringing you some mind-blowing price predictions from top experts. One analyst is calling for Bitcoin to hit a staggering $150,000, but there's a catch. It all hinges on massive whale sell-offs completing. We'll break down the whale theory and what it could mean for your portfolio. And finally, we're closing out with a look at the immediate market action. Bitcoin has retaken a crucial $111,000 level, and major risk assets are reversing course after a tough August. What's driving this comeback, and what does it signal for the week ahead? Get ready for an action-packed episode that you won't want to miss. Make sure you're subscribed and the notification bell is on so you never miss an update. Texas grid under pressure. A judge's decision looms over Bitcoin mine expansion. In the heart of Hood County, Texas, a critical decision is unfolding that could significantly impact both the local community and the broader energy landscape. A state judge is currently deliberating whether to grant environmental regulators the permit for a third power source to support a large-scale Bitcoin mining operation. This proposed gas-fired plant, set to generate a substantial 300 megawatts, is part of a controversial expansion by Constellation Energy, the owner of the facility and an adjacent power plant. The company argues that this new generation unit is vital for the Texas grid, especially as demand is projected to double by 2030. They emphasize its role as a crucial backup during extreme weather events, ensuring an adequate power supply for the state. However, this expansion is far from universally welcomed. Residents in the unincorporated neighborhood of Mitchell Bend, located near Granbury, have voiced grave concerns, citing years of suffering from noise pollution, vibrations, and alleged health issues stemming from the existing Bitcoin mine and power plants. They have actively contested the permit, presenting their case before a state judge, highlighting state laws mandating protection of public health. Residents like Daniel Lakey and Cheryl Shadden, who leads the Bitcoin Noise Hood County Facebook group, have testified about hearing loss, tinnitus, and a general decline in well-being, attributing it to the constant disruption. They claim the expansion will only exacerbate these problems, impacting property values and their overall quality of life. Constellation Energy, on the other hand, asserts that its permit application has undergone rigorous evaluation and will meet all federal and state environmental standards. They also point to the economic benefits, including job creation, with several permanent positions and 80 temporary construction jobs expected. The company maintains a commitment to being a good neighbor and supporting the local community. The situation is further complicated by local political efforts, with residents pushing to incorporate Mitchell Bend to gain more regulatory power over noise and pollution. They allege interference from Marathon Digital Holdings, the owner of the Bitcoin mine, in their previous incorporation petition, a complaint that has been filed with the state. The judge's decision on the permit will weigh the energy company's arguments for grid stability and economic growth against the residents' urgent pleas for health protection and environmental preservation. The outcome will undoubtedly set a precedent for similar developments in energy-intensive industries. Now, hold on tight as we pivot from local energy battles to the electrifying world of global finance and price predictions. Get ready, because we're about to reveal what's driving Bitcoin towards a staggering $150,000 target. Whale Watch. Expert predicts Bitcoin to soar to $150K as major holders exit. In a market often swayed by the actions of large-scale investors, often referred to as whales, a significant prediction is making waves. Bitcoin could be on the verge of an unprecedented surge to $150,000, provided these major players finish their selling spree. Bitcoin Nakamoto CEO David Bailey recently shared his analysis, suggesting that the current price stagnation, hovering around $110,000 and down from its all-time highs, is directly attributable to the resistance presented by two massive whale entities. Bailey's whale theory posits that once these significant holders complete their liquidations, with one already having sold and another halfway through, the market could enter an up-only trajectory. This scenario implies that Bitcoin could experience a 36% climb from its current levels, breaking through what appears to be an artificial ceiling created by this concentrated selling pressure, allowing for natural price discovery. The credibility of Bailey's thesis is bolstered by recent market activity. Large Bitcoin transactions have indeed rattled the market. For instance, on August 24th, a whale offloaded 24,000 BTC, valued at approximately $2.7 billion. This single transaction contributed to a flash crash that liquidated over $500 million in leveraged positions across the market. Furthermore, another whale was observed moving a substantial $4 billion worth of Bitcoin into Ethereum via the Hyperliquid exchange, indicating a potential rotation of assets among major holders. This pattern of significant whale movements aligns with Bailey's assertion that their selling activity is a primary impediment to Bitcoin reaching higher price points. Beyond Bailey's specific prediction, other prominent financial analysts and institutions are also bullish on Bitcoin's future. Fundstrat co-founder Tom Lee maintains an aggressive forecast, projecting Bitcoin could reach $200,000 or even $250,000 by the end of the year. His optimism is rooted in a fundamental supply-demand imbalance, noting that while 95% of all Bitcoin has been mined, a vast majority of the global population still does not own any. Lee even extends his long-term vision to $1 million per coin, suggesting Bitcoin could eventually rival gold's market capitalization. BitMEX co-founder Arthur Hayes echoes the $250,000 target, citing institutional adoption and global fiscal expansion as key drivers, viewing Bitcoin as a crucial macroeconomic asset. Galaxy Digital's outlook, while slightly more conservative, places Bitcoin between $150,000 and $180,000 by the close of 2025, with CEO Mike Novogratz also targeting $150,000 in the near term, driven by market momentum and favorable macro conditions. Despite this widespread optimism, some analysts caution that September could be a fragile month for Bitcoin, citing historical data that shows it as a down month in 8 out of the last 12 years, coupled with a recent lack of liquidity. However, even cautious analysts like those at Bitfinex believe the market is nearing the bottom of its current downturn, anticipating a pickup in ETF flows as summer concludes. Technical analysis also supports a bullish outlook, with patterns suggesting potential targets in the $130,000, $150,000 range, contingent on breaking key resistance levels. Now, from the digital realm of crypto speculation, let's turn our attention to the real-world economic signals coming out of China. Prepare yourself as we uncover how record-breaking margin debt in Chinese stocks is impacting global markets and what it means for Bitcoin. China's record margin debt fuels global risk-on sentiment, but caution remains for crypto. In a significant development that's sending ripples across global financial markets, investors in China have collectively borrowed a record sum to invest in their domestic stock market, signaling a strong risk-on appetite. This surge in margin trading, where investors borrow funds from brokers to purchase securities, has reached an unprecedented level, surpassing the previous peak set in 2015. According to Bloomberg, outstanding margin trades in China's onshore equity market hit 2.28 trillion yuan, approximately $320 billion, on Monday. This figure eclipses the 2015 record of 2.27 trillion yuan, underscoring a heightened level of investor confidence and leverage in the Chinese stock market. The Shanghai Composite Index has seen a robust performance this year, climbing 15%, outperforming the S&P 500's roughly 10% gain, while the broader CSI 300 index has advanced 14%. This bullish momentum in Chinese equities is often interpreted as a positive indicator for global markets, reflecting increased investor willingness to take on risk, which can often spill over into other asset classes, including cryptocurrencies. However, this record high in margin debt is occurring against a backdrop that warrants caution. Data tracking firm Macro pointed out that this surge is happening amid slowing economic growth in China, a stark contrast to 2015 when the country's GDP was significantly stronger. Macro noted that while the current rally shows broader sector participation beyond just AI and chips, and benefits from a larger deposit base, deflationary pressures continue to impact corporate pricing power. With forward earnings down 2.5%, debt-funded positions become inherently riskier, as companies may struggle to raise prices to service their debts. The potential for a sharp unwinding of this record margin debt could trigger significant volatility, with potential spillover effects that could impact global markets. In the cryptocurrency space, while there isn't a direct equivalent to China's margin debt metric, traders often use perpetual funding rates as a proxy for leverage demand. Currently, funding rates for the top 25 cryptocurrencies are fluctuating between 5% and 10%. This range suggests a moderate level of bullish leverage among crypto traders, indicating a cautious optimism. While there is demand for leveraged long positions, market participants appear to be balancing this with risk management strategies. This contrasts with the more aggressive leveraging seen in China's stock market. The implications of China's record margin debt for Bitcoin are multifaceted. A sustained global, risk-on sentiment driven by such indicators could provide a tailwind for Bitcoin, pushing it higher as investors seek higher returns. However, the underlying economic conditions in China and the potential for a market correction due to excessive leverage could also introduce volatility and risk aversion, potentially dampening enthusiasm for riskier assets like Bitcoin. The market will be closely watching how these dynamics play out. From the complex interplay of global economic signals, we now return our focus to the immediate action in the crypto markets. Get ready for a significant shift as Bitcoin makes a strong comeback, reclaiming key price levels and leading a charge in risk assets. Bitcoin reclaims $111K amid broader risk asset reversal. After a challenging close to August, the cryptocurrency market is kicking off September with a decidedly stronger tone, led by Bitcoin's resurgence above the $111,000 mark. The buying momentum intensified as U.S. traders returned to their desks following a three-day weekend, propelling Bitcoin from an opening level around $107,500 to intraday highs of $111,700. At the time of reporting, Bitcoin was trading at approximately $111,600, reflecting a solid 2.5% increase over the preceding 24 hours. This upward movement was mirrored across other major cryptocurrencies, with Solana and XRP also posting gains of similar magnitude. Notably, Ether, which had been a strong performer in August, was trading relatively flat over the same period. A significant catalyst for this positive shift in crypto markets appears to be a strong rebound in stock markets. Earlier in the day, major U.S. indices, including the Nasdaq, experienced substantial losses, down by as much as 2%, attributed to negative tariff news and rising global long-term interest rates. However, buyers stepped in, and by mid-morning, these indices had recovered roughly half of their initial losses. Adding to the market narrative, the latest economic data from the U.S. showed the ISM Manufacturing Index for August coming in at 48.7. While this figure narrowly missed economist forecasts and indicated a continued contraction in the manufacturing sector, the prices paid subindex, although softer than expected at 63.7 compared to the forecast of 65.3, still suggested some easing in price pressures. The key economic report to watch this week will be the U.S. employment numbers scheduled for Friday. Strong employment data could potentially cast doubt on the Federal Reserve's anticipated interest rate cuts at its upcoming meeting this month. Conversely, a weaker-than-expected print might increase the likelihood of a 50 basis point cut, rather than the widely anticipated 25 basis point reduction. This upcoming data point will be crucial in shaping market expectations for monetary policy, which has a significant impact on risk assets like Bitcoin. In related news, XRP is consolidating below the $3 mark, with technical indicators like the RSI and MACD hinting at a potential breakout. XRP has been trading in a volatile range between $2.70 and $2.83, with reports of whales accumulating nearly $960 million worth of tokens, suggesting underlying bullish sentiment despite the price consolidation. That wraps up our deep dives into today's major market movements. Stay tuned for a rapid-fire recap of all the key stories, and don't forget to hit that subscribe button. And that's a wrap for today's Bitcoin Bulletin. We saw a Texas judge weighing in on a controversial Bitcoin mine expansion, expert predictions placing Bitcoin at $150K driven by whale activity, record margin debt in China signaling global risk-on but caution for crypto, and Bitcoin reclaiming $111K as risk assets reversed course. If you found this information valuable, make sure to smash that like button, subscribe to the channel, ring that notification bell so you never miss an update, and follow us on all our social media channels for more real-time insights. We'll see you next time.